Put that little lot together, they're going to get bigger and more powerful. I think Apple's around 3.5 trillion, Nvidia 3.5 trillion market cap.
We've got a new president on the 20th of January. And I know over the years...
It's not a new president, it's an old president.
Yeah.
A re-elected one. I think South America will benefit from what President-elect Trump will do. You're already starting to see in the EV markets, the Chinese pursue Belt and Road markets. On the point of AI, the compute needs and the energy needs of AI means, going back to that fact that AI companies are switching spend from OPEX to CAPEX, it means that the big companies, and by the big companies I mean Alphabet and Google, Meta, Facebook and Instagram, Amazon, Alibaba, Tencent, and ByteDance, which is the parent company for TikTok. Those six are the big platforms. Those six actually, ad spending this year will hit $1 trillion for the first time. And of that trillion, 700 billion will be in those digital platforms. And, Google will be 250, Meta will be 150, so that's 400. Amazon will be 60, that's 460. TikTok outside the mainland China will be 40. So 500 billion is in those four platforms. That big tech will get bigger because of the capital expenditure needs around compute and energy. And those six companies, plus, so Alibaba, Tencent, plus those four platforms, plus Nvidia, plus Apple, plus Microsoft, plus probably Adobe, Oracle, and Salesforce. Musk, never count him out, particularly given his prominent positioning with President-elect Trump. Put that little lot together, they're going to get bigger and more powerful. The biggest of them are 3.5 trillion. I think Apple's around 3.5 trillion, Nvidia 3.5 trillion market cap. That's as big as Germany if you equate market cap to GDP. These are countries, these companies, and they will become bigger countries because of the capital needs.
I must ask you first of all about the share price, which you commented on, didn't you? Which lost about 16% quite recently. You did comment on that. What's the reason? Because it was something about an earnings forecast, I understand.
Well, a couple of things. We've been struggling with a couple of things. First, tech companies, of which are about 50% of our revenues, have switched their OPEX to CAPEX. So they've switched operating expenditure around advertising and marketing, for example, that's one of the areas, into capital expenditure for AI. I mean, you may have seen that the Magnificent Seven or the big tech companies are spending large amounts of money. Amazon as much as 100 billion alone this year. I do think China is going to explore increasingly the non-US, non-Chinese markets. So just think about it from a GDP point of view. It's 106 trillion or thereabouts in worldwide GDP. America is 28, China is 18, so that's 46. There's another 60. And you're already starting to see in the EV markets, the electric vehicle markets, the Chinese pursue the Belt and Road markets. That's that other 60 trillion that's outside US and China, and seek to divide Europe. I mean, it was interesting on the EV tariffs that the Chinese started to drive a wedge. You remember the German and Spanish governments came out and said they would not support a tariff on Chinese EV exports or imports into Europe. In the end, it didn't work. But I think China, if I was doing what they're doing, I would be looking at the Belt and Road, the global south.
We've got a new president on the 20th of January. And I know over the years...
It's not a new president, it's an old president.
Well, yeah.
A re-elected one.
A re-elected one. But, I mean, the United States of America seems to have played a pretty strong hand in your businesses over the years. And I know of no person who knows more about how the economy is going to evolve. Are you excited? A combination of fearful, interested? Tell me what your thoughts are.
Well, I think If you have a business in America like we do, 80% of our business is in the Americas, South America, and I think South America will benefit from what President-elect Trump will do around tax and regulation. So I think, look, if you're running a business in North America, Trump is good news from a business point of view. I think Europe is faced, as we know, France, Germany, maybe a little bit less so, Italy and Spain, but the UK as well. Those three big European economies are all faced with issues. Tariffs will accelerate those issues. They'll be inflationary. You've seen the Bank of England lower interest rates, quarter point. Probably the Bank of England is not lowered as much as we thought. The budget here is probably inflationary. I mean, we saw stories over the weekend about £1 billion bill for Tesco, for example, one of the biggest, if not the biggest employer in the UK, with higher employer national insurance contribution. Obviously, it's increased costs. Will that mean increased prices? My guess is it probably will. And I think the world is different. It's not Ted Levitt's globalized world anymore. It's a much more, it may be still globalizing in some respects, but it's very much more fragmented world. In that world, if you accept the premise that growth is going to be slower, inflation was more than it was before, and interest rates higher, two lessons. One, choose your geographical markets carefully. And I think those markets are going to be North and South America, the Middle East, and APAC, with a qualifier on China, because if you're big in China, if China is already 15 to 20% of your sales, you probably don't want to take the Taiwan risk. So India, Indonesia, Vietnam, Singapore, Malaysia, Thailand, the Philippines become more important.